William O'Neill was born on March 25, 1933 in Oklahoma City and was raised in Texas. He is best known as the founder of Investors Business Daily and William O'Neill and Company Inc. He has also written several investing books such as How to Make Money in Stocks, which presents what he has learned about growth stock investing.
CanSlim is the O'Neill system for finding growth stocks. The name is an acronym of the factors that determine whether the company is a good investment. He emphasizes that all 7 conditions must be met by a company in order for it to be a good stock to invest in.
C stands for current quarterly earning per share should be accelerating. This is important because a percentage increase is the most important factor in stock selection. A stands for annual earnings per share should be accelerating. Annual earnings per share should increase in the past 5 years by at least 25% a year, or
N stands for something new should be driving the stock to new highs. There should be something new that is positively affecting the company's future, such as a new product or service. S means supply of stock should be small and demand should be high. O'Neill says that if 2 stocks are steaming upward at the same pace, the one with fewer shares will perform better because there are fewer shares for the people who want to buy it. L means leaders in an industry should be your target. Leaders are the stocks with the best relative price strengths on a scale from 0 to 99, 99 being the best. He tells us to look for stocks with relative price strength of 90 or better. I stands for institutional sponsorship should be moderate. O'Neill likes his stock to be owned by a few institutions. M stands for market direction should go upward. Aside from CanSlim, he also advises to ignore PE ratios and focuses on earnings acceleration.
When managing a portfolio, O'Neill says to sell the worst performing stocks first and keep the best acting investments a little longer. One way of automating investments is to set a place of stop losses at 8% because it takes a greater percent gain to overcome any percent loss. On the other hand, if stocks rises, you should pyramid more money into it up to 5% past the buy point. And once the stock has risen 20% over the period longer than 8 weeks, you should consider selling. It is better to focus on few good stocks. He also recommends to buy and sell in parcels if a stock starts to drop or raise in value. Finally, to overcome the desire to buy more of the stocks that have declined in price, it is good to rank the stocks by their performance and after sell the losers and add to the winners.
Some companies O'Neill would possibly invest in are Google, Apple, and Coca-Cola because the annual earnings per share for the past 5 years increases by at least 25% and follows the rest of the CanSlim system.